We talked about this tension between equity and fixed income. Look no further than Netflix. I want to bring up this quote from Bloomberg Gadfly from Shira Ovidi. Reads as follows: Netflix's strategy means two things. The company must keep churning out shows compelling enough to persuade more people to subscribe, and it needs to be able to continue borrowing money at low cost to finance its losses. Is Henry Peabody of Eaton Vance going to be financing those losses for much longer?
Well, in the multi-sector income strategy, no. I'm looking here, and bonds are 10-year debt's roughly par at 4.5%, and that, to us, is not nearly enough to offset the risk. So that's not something that we're interested in. I think there are a handful of, obviously, high-yield strategies that are closer to the benchmark that will be compelled to own debt like this, but that's not something that we will be supporting. And that flexibility we enjoy is a great advantage, we think.
You talk about that richness in fixed income. Look no further than this story. Howard Marks raised this point. The idea that the sexiness of the growth story in the equity is somehow reflected in the credit. It doesn't make sense because the upside's all in the equity. It's not in the credit. So why is it being reflected in the credit? Why are they trading near par when you see how much cash they're burning through and you know there's more to come?
Well, we've gotten to a place where it's a relative value game, and I think there are very few people who are really compelled about a specific sector or asset class. And when you get into the point of the cycle where you say Netflix is 50 back of something else, and you start justifying valuation in that fashion, and their stock is up and to the right, that's when you're getting into dangerous territory. So I totally agree with you, and obviously Marx is brilliant. But this is a dangerous spot we're in, and I don't think we're talking about an imminent blow-up, but we're not talking about compelling valuation and that sets up for a good return.
Not a compelling valuation for the credit story. Is there anything compelling about this from the equity point of view? The momentum behind this stock, behind this story, Steve's huge.
Yeah, Jonathan, unfortunately, we've missed this one. We like Amazon, we like Facebook, we like Google, we like companies that have cash flow and we can understand them. Netflix is a tough one for us. Valuation is really tough. There's no cash flow. You're buying a lot on the come here. But it's been a great stock. I mean, there's a story behind it. I can't knock it, but we're not there.
But just as an equity investor, we're seeing media and technology just kind of do this.
Yeah.
Just completely fold over and merge. There's single winners in almost each industry, and both of those industries are just completely crossing over.
Right. So I'm a big believer, Jonathan, in not swinging at every pitch that comes across the plate. I just got to take the fat pitches and hit them out of the park, or at least get a nice double or triple out of it.
So what's the fat pitch right now?
I don't see a fat pitch in this media space.
Yeah.
There's so much things going on. It's not completely clear how this is going to evolve. I think Amazon looks like, a player. Facebook looks like a player that's going to be here for a long time. But there is a lot of moving parts right now.
Conviction trades from both of you going into year end. Just the opportunity to put them out there, guys, before I lose you. Steve?
Financials, we like JP Morgan. Energy, we like Halliburton.
Henry?
Non-dollar. It's really the only way to take advantage of compelling real yields and an overvalued U.S. dollar.
So non-dollar, I'm thinking EM?
Yeah.
And you're happy to take that FX risk?
Yes, absolutely. I think that there's a bias to look at rate differentials as a currency driver, but let's also talk about global growth and the U.S. not being the only game in town. And that won't that means that we aren't forcing the dollar higher at this point. Global growth is good for currency.